Hello everyone. In this recording we are going to discuss about technical analysis. So technical analysis is a type of analysis that tries to predict whether we have to go long on stock or we have to go short on stock. Okay. Technical analysis tries to predict demand and supply of stock. If demand is going to be high, then stocks would go up because there were more buyers than sellers. If supply is going to be high, then stocks would go down because then there are more sellers than buyers. Okay, technical analysis is where you read charts and chart patterns and indicators to analyze stocks. Okay, so let's go one by one. So what is a chart? So generally I'll open a sample chart and explain it there. Okay, so let's look at Tesla. Now what I'm going to do is I'm going to click on chart, then click on streaming chart, zoom it up. Okay, so this is a typical chart of Tesla, right? This is a typical stock chart. Now what do you have on x-axis? You have time, so this is all time. All these data points are time, and on y-axis you have prices. So generally a chart has price in x-axis, time in x-axis and price in y-axis. Okay, so you have time versus price, so it's a price time chart. Now there are different types to look at data points of prices. This is typically an area chart, so it shows how this is an area because this is a filled area. So it is generally drawn by joining the closing prices of stock. We are looking at daily chart, so it is trying to join the closing prices of stock of Tesla. Okay, closing prices each day. If you are looking at 1 hour chart, it would try to join closing prices of Tesla each hour. If you're looking at 5 minute chart, it would try to join closing prices of stock each 5 minutes. Okay, the next type of chart is a line chart. So instead of looking at a filled area, it just shows line, but again the logic remains same, that we are looking at closing prices. Okay, then you have, sorry for that, you have and bar chart. See, my laptop sometimes it has gotten old, I have to buy a new one. Just a second. I would try to refresh it. Sorry for that. I have to buy a new laptop on priority. Okay, zoom again. Next is bar chart. So we have discussed line area that tries to join only closing prices. So only one variable is available, one information is available, the closing prices. Now bar chart is little better because it will try to show more information. So there are two types of bars, green and the red one. Green and the red one. Now for every bar, the left hand side, this left hand, what do you say, small needle, this left small needle indicates opening price, this right small needle indicates closing price. Then there is range, this is the lowest point of the needle, this is the highest point of the needle. So what does it show? In one day, stock opened at this left needle, it went down to the range, right? It went up to the range, and it closed at the right needle. So left needle is open, right needle is closed, right? Then you have a range. Range is how high it went and how low it went. So there are four variables that are available: opening price, closing price, high price, low price. So instead of just one information, you have four informations now, right? Now color wise, there are two colors of bar charts, green and red. So in green, what happens? The opening is lower than closing. So it opens at lower price, it goes up, and it closes above opening price. In red chart, the opening is higher than closing. So it opens at a high price, it goes down, and it closes at a lower price. So this is the logic. Okay. So if you look at 5 minutes candle, same thing. This green candles means in 5 minutes it opened at this price, it went as high as this price, it went as low as this price, and it closed here. This red candle means it opened here, it went high as this price, it went down, and it closed there. So it has four information points. Now the next type of chart, and the important one, is candles. So let's look at daily candles. So I'll just try to zoom it a bit also. Okay. Yeah. So let me identify a good candle to discuss. So let's go for monthly chart. Yeah, this is better. So candle has also four data points. It has the lower needle. This is the lower needle, right? Lowest point in the particular time frame. This is the higher needle, the highest point in particular time frame. Then the body of candle. Now if body of candle is green, it means the base of candle is open and the top of candle is closed. The base of the body is open and the top of candle is closed. Okay. If it is red, then base of candle is closed and top of candle is open. So what is happening here? The stock went as low as 247 in this month, it went as high as 308 in this month. It when the month opened, it was at 266, when the month closed, it is at 291, right? Then let's say this month, this candle, this red candle, what happened in this candle? The stock went as high as 266, it went as low as 233. It opened, it's a red candle, so it opened at 245 and it closed at 239. Okay, so green candle indicates the stock opened low and closed high. Red candle indicates the stock opened up and closed down. Then there is Heikin Ashi candles. Heikin Ashi candles are smoothened candles. So instead of looking at normal candles, we try to reduce the noise that is there and we used smoothened candles. Okay, so let's go on to the next point. Okay, before moving on, there is one more type of chart called as Renko. Renko doesn't have time involved. So Renko doesn't have time. It will just has price. So what does Renko does? Renko creates steps of particular prices, 5 points or 10 points or whatever is the default setting. And if the price changes more than that set step, so they create a step, 5 point step, 10 point step, etc. If price changes more than that step, then a new candle is created. Otherwise it continues in the same candle. For example, price was here, it increased to 202, so it created a new candle. It increased to 207, so it created a new candle. So every step is for 5 points here in Renko. Okay, and if red means if it goes down and by more than 5 points, it will create a new candle. It doesn't have any time involved. Okay, so a stock can be at same candle if it doesn't move by 5 points forever. Clear? Next is, how do you analyze charts? So we do it by using patterns. So importance of patterns is, first, support and resistance. So first we'll look at supports. So what are supports? Supports are price at which a stock may experience entry of new buyers. So demand may rise and the stock might go up. So stocks supports are price at which it is expected that new buyers may enter into the stock, and if new buyers are entering, the price may go up because the demand is rising. Okay, now how do you identify support? So we generally look for valley patterns in the stock. So steps for identifying support: look left and go down from the current price. Then identify a valley. Look at the lowest candle in the valley. Top of body of that candle is the support. Okay, so let's try to do that. So let's go back to, let's look at 1 hour chart. Let's look at normal Heikin Ashi candles, so average candles. Let's okay, so So stock is currently here. So what we have seen, that we have to identify a valley. Okay, so for identifying valley, look left and go down. Okay, so this is the first valley that is there. This is the long valley that is there. Now what we do, we try to find the lowest candle in this valley. So this is the lowest candle, right? Then not top, it is base, sorry, base of the body of that candle is the support. Now in this lowest candle, can you see this base? This base price. Okay, so just a second, I'll move this little here. So this base price is 247. So this 247 will be our support. Now we generally look at supports in a particular range. So it is not one data point, it's a particular zone. So from this base to the needle is the support level. So from 247 to let's say 245 is our support zone. So if the stock reaches that zone, it is expected that new buyers may come in, and if new buyers are coming in, demand will rise and stock price will move up. Okay, so how to identify supports? Look for valleys, identify the lowest candle. From the base of this candle to the needle of that candle, that is your support zone. If the stock reaches that support zone, it may bounce up. Okay, next is resistance. So resistance, what is resistance? Price at which a stock may experience entry of new sellers. So supply might rise, and it may lead for the stock to go down. How do I identify resistance? We look for hill patterns. So instead of valley, look for hills. Okay, so look left, look left and go up from the current price, and identify a hill. In that hill, highest candle, identify the highest candle, and top of that candle to the needle is your resistance zone. So let's do it for Tesla. So stock is here. So the closest hill is this one. This is a hill. So stock went up, it approached a base, then it went down. So this is an hill. So the tallest candle is this. So top of that candle, so 305, to the needle of that candle, 308, is our resistance zone. So 305 to 308 is our resistance zone. If stock reaches that zone, new sellers may kick in and the stock price may go down. Okay, another resistance zone can be this. So this is also a hill. The top of the candle 320, right, to 322. If the price reaches that, new sellers may enter, supply might increase and the stock might go down. So what we generally do, we buy at supports, we go long at supports, and we go short at resistance. Okay, so this is basics of pattern. There are other patterns like double top, double bottom, then head and shoulders and all. So you can search it online, or we'll discuss it in some future classes. The next is, you can also look at indicators. So stock indicators. So let's take few examples. So first is moving averages. So moving average is a line that connects means time factored averages. Okay, there are different types of moving averages, but we'll generally use exponential because it gives more weightage to recent data than the past data. So what we do, we try to draw two moving averages. So we try to superimpose two moving averages on charts. So one would be long term, longer duration. So not long term, longer duration, and one is shorter duration. And we look for crosses. So we look for crosses. Okay, if short duration moving average is crossing the long duration moving average and going up, then it's a golden cross. If short duration moving average is crossing the long duration moving average and going down, it's a death cross. We generally buy or go long at golden cross and we go short at death cross. So let's look how it is done. So let's look how golden cross and death cross happens. So this is Tesla. So what we have to do, we have to superimpose two moving averages. So I'm going exponential moving average. Okay, so this is the first moving average. So let's change some settings. So it's a 9-period moving average. Let's say I'm doing 20 and 50. So 20 is short term, or let's do 50. Okay, let's do 10 and 50. So 10 is short term. Okay, then I impose another exponential moving average. So you have to superimpose two exponential moving averages, and the second one I am doing it 50, and I'm changing color also so that it is we can identify it easily. So yellow. Okay, so long term is yellow and short term is purple. Okay, that is our logic. Now what we do, we look for crossovers. Crossover means these two moving averages are intersecting. Now at this point, what is happening, the shorter moving average, that is purple, is crossing the longer one and going up, right? The shorter one is crossing the longer one and going up. So this is a golden cross. We generally buy at golden cross. Okay, this is a death cross. So shorter moving average is crossing the longer one and going down. So that's a death cross. We short at death cross. Another example for indicator can be stochastics. So stochastics draws two lines. Okay, the stochastic line and the average line, and we generally trade on again crossovers. To be effective, we generally trade on crossovers in the range. So I'll discuss it on the graph. So I'm deleting this. This is the stock chart. I'm adding an indicator called as stochastics. I'm closing it. So what we do, this is a stochastic chart. This is a stochastic indicator. Now this indicator generally is not okay. I'm looking at 1 day chart, so it is little smoothened out. So this stochastic indicator, we don't trade when crossover happens. Crossover means there are two lines, the purple line and the red line. So we trade when purple line crosses the red line. Okay, but we generally don't trade if crossovers are happening in this middle range. We trade when they are happening outside this range. Okay, for example, this is a golden crossover. Why? Because the purple line is crossing the red line and going up. So the purple line is the average line, and means is the stochastic line, and this is the average line. So it is crossing, purple line is crossing the red line and going up, so it's a golden cross. We buy. And this is a death cross. This is a typical death cross. The purple line is crossing the red line and going down. So you look for crossovers. The blue line crossing the red one going up, it's a golden cross. The blue line crossing the red line and going down, it's a death cross. So golden cross you go long, death cross you go short. And generally trade only when the crossovers are happening outside this range. Okay. Third indicator that you can look at is RSI, relative strength index. So it's a ratio of number of advances the stock had versus number of declines that the stock had. Okay, so I'll show it on the graph. Indicators, RSI, okay, so this is RSI. So RSI is a ratio of advances versus decline, number of advances the stock had versus number of declines that the stock had. Analyzing RSI is simple. If RSI is below this range, so this is 30 or 20, so below this range we buy. If it is above this range we short. So below this range you go long, above this range you go short. That is the analysis of. So this was above the range, you go short. This was below the range, you go long. So these are different indicators. In the next class we'll try to design. So this is how technical analysis is done. We can use charts, we can use patterns, etc. Okay, charts are of different type except Renko. Renko doesn't have time. Time is in x-axis and price is in y-axis. Then we have discussed what is support, resistance, then what are some common indicators like moving averages, stochastics, and RSI. In the next class we'll try to discuss how to create a trade plan.